S&P closes at a new yearly high. Nasdaq presses against its upper channel. SOX rejects the high of its control bar. Nvidia's shooting star pattern. The one subsector everyone's missing, and it's not just cars. The plummeting dollar and who benefits. What smart money, dumb money confidence is telling us. Tesla. Netflix heading into earnings. Why AEHR's quarter was so critical. Industrials breaking out to all-time highs. This has happened only 7 times in 2 years with Microsoft. We'll explain what it is and what it's telling us. We have a lot to go over. Let's get to it. Hey everybody, welcome back. Let's go start with the basics. If we take a look at the ES, we can clearly see the break. We have a new closing highs. It's hard not to like that part of what happened this week. Now we're going to drill into this in greater detail, but I do like what we're seeing there. You have some key levels that you've just been able to get above, stay above, and never even retest. Candidly, I wouldn't even mind if we came back and retested this area. If we take a look at this here, I think that next obviously is that 4640. We're going into earnings season, which we're going to discuss in a moment, but I want to just talk about the technicals here for a second. It's very hard to not like something like this where you have this left shoulder, head, right shoulder, and you should be able to see that right here, but left shoulder, head, right shoulder, and then you have this neckline that you've been able to stay above. It's exactly what you want to see. Now, if you came back and retested that neckline, I really wouldn't have a major problem with it. It's not something that would bother me in the least, but I do think that this is something that we should be paying attention to as we watch this move forward. And there's some very simple things to watch. We're seeing the RSI continue to climb, which is exactly what we want to see. We like it staying above that 70. It usually puts us in a good spot. If you take a look historically, when you're above there, you do quite well. And you can stay up here for a period of time. In 2021, I think we stayed up here for about 2 years. Well, about 6 months, we stayed up here. In 2021, we stayed up here for about 6 months. And of course, we were above this before the pandemic. And the greatest moves that the market has is when we are above that level. So we like that we're above it. We just need to be cautious. And it doesn't mean that we can't have pullbacks, which we're going to get into in a little bit. But we're coming into a big week, and there are some signs of rotation that we're going to address. But technically speaking, I don't see anything really broken here. I do think that you can come back and start testing some of these levels and backfilling, and you would just want to know where those levels are. So I'm just going to mark them off for everybody right there, and you can just kind of use those as a guide. But that's how I see the world right now. I don't see any sense of me looking at this and saying that we're setting up to pull back. Again, if I look at the MACD, it's doing nothing but just pointing straight up. Very similar to what happened here when we broke above that zero line. And you can see here from June 2020 to February 22, we stayed above that zero line. I'll be concerned when we break that zero line on more of a long-term positioning. That is something that's always a concern. As you can see, that can affect the market for a very long period of time, or long enough that you should be concerned about it. Let me put it to you that way. And it's not common, but it does happen. And that would give me pause. But that's, again, not what we're seeing. If we get rid of all our levels here and we just focus on the obvious, what I think is obvious anyway, that you have these lower positions that are curving. You can see that curve. And what's happening here with the moving averages, they're actually getting wider and wider. That's exactly what we want. Now, we are going into earnings season. Next week, we will have 12% of earnings come out. We've already gone through the financials, and the financials did okay. Let's clean this off. It's part of the free newsletter. If you don't get the newsletter, link in description. So you can see here with financials how we're starting to curl up on the MACD. We're starting to get above these key moving averages. If we just very simply take out those moving averages and just look at what we're dealing with, we're getting above the zero line, and these are trying to expand. Well, that's exactly what we want to see. That's exactly what you want to see. You want to see us getting above those levels. And we all know we broke down when we started seeing the regional banking crisis. And it seems to me that we're getting away from that. So just because we had a bad day on Friday, which quite frankly, I don't even consider it that bad of a day. If you take a look at what's going on here, you have this DTL, downward trend line, and we should all be able to see that. Obviously, I mean, it's pretty glaring when you can see these spots right here. I don't really see a need to look at this and say, okay, I need to get in right now. I have this level and I want to pay attention to that level, but I don't think that you're just automatically going to get above this 36. I think that might take a little bit of time. That's been a pretty solid control bar. We can all see that. That's definitely a concern, but we are expanding out into different areas, and we did see some pretty solid moves the other day. JP Morgan, people will say, well, it gave a lot back. Well, did it? I mean, we're still closing at a new weekly high. We still broke out. We didn't break down. MACD still above. This is one of the leading stocks in that sector. I would pay attention to this. KRE, this is the regional banks. This is getting very clear that you have, I mean, this is very obvious what. I mean, we should all be able to see this, but again, you have you have this low and this break from this bear flag. You have this pivot area right here, and then you just made a higher low, and now here you are banging your head against major resistance. That's obviously become major resistance. We're starting to see that, and you're starting to see some of these names really continue. NYCB's one that we've been in since about $8, $8.50, something like that around here. And you can see how it's acting. And all we're doing is just grinding higher and grinding higher. And I really don't see why that's going to stop. I mean, I don't think anybody truly believes anymore that they're going to come out and put themselves in a position. Let's go out even further on this so you can just see. I don't think anybody really believes anymore that they're going to put themselves in a position where regional banks are going to just collapse. I think we know that they've stabilized. Now, if they raise rates substantially over and over again, but we're not seeing signs of any reason to do that. They're probably going to do it once more, and that's going to be it. And that's what we're getting from this data. Now, whether or not that's the case, that remains to be seen. But if you drill into some more of these, like let's take a look at the NQ just on a monthly so you can understand what I'm saying, so that when you hear how I'm bullish and I'm looking at this long term, this is the kind of stuff that I'm looking at. And this is looking out years. This is not looking out Tuesday. So you have to understand when we start talking about this and we start diving into some of the things I'm going to say about next week versus how I see the world. I have a larger picture, and then I drill down from that 34,000 picture into what's going to happen Tuesday with Microsoft, things like that, or what was AEHR's earnings. But I always want to keep a much larger picture of where we are in the food chain. And we can see here very clearly that we're flipping on the MACD. We did not break that zero line, and we're curling back up. This takes months for this to happen on a monthly chart. Okay, this is not something that happened because NVIDIA had a good quarter. This takes months, and this is technically speaking. Now, could this change? Of course, if the economy changes and things change, of course that can happen. But historically, if you look at this level, when you touch this level and then you get back over it, which really has only happened once in the Great Financial Crisis, we're only going back 20 years here, it's something to pay attention to. And so I am paying attention to that, and long term, it's definitely something that you should be paying attention to as well. You drill this out on a weekly, and you can just see how strong we are and how we're pushing back to these highs. Again, we were above here on the Nasdaq for about 2 years before we broke. So we have plenty of time. If this starts crossing or rolling down, then yeah, that would be a concern. Now, daily, if we drill into the NQ, you have a couple issues here that we're going to address. You can see the movement down, even though the stock price has been lifting, the index price has been lifting. And we have this level that we're all supposed to be staring at here and saying, oh, well, we got up to here and we dropped. Okay, and what does that do for us? I mean, if you take that level and you clone it, and you should always clone your level so you get the same trajectory, and then you drop it in here. Okay, so there's my channel. So what does that mean? That's how you get the best channels, is by cloning them and get the same trajectory. So here's my channel. Where's that put me? All right, if I was to drop, well, that could get me all the way down to here. That gets me to 14.4, just playing devil's advocate for a moment. All right, what does that do? Well, that still has me up on the year, doesn't it? Roughly, if I stay in that channel, I'd still be up 33%. I mean, you have to look at this in the context of, can we pull back? Absolutely, we can pull back. And there's some signs of that are going on that we have to pay attention to. But that doesn't mean that that correction is the end of the bull market. And that's one of the reasons why you have to understand where you are. I mean, if you don't think you're in a bull market, you're wrong. I mean, it's very obvious that you're in one of the strongest markets that we've ever had. Whether you want to admit that or not, or agree with it, that's up to you. If you want to be an economist and point at things that are wrong with the world, that's fine. You can see that here with the ES, how it's crossing as well. Again, this takes months. This is not something that happens in a day. Where I think we're going with this is I think we're going to a point where we're going into earnings and a couple things are going to happen. This is the stocks on a monthly chart. Note the cross. And I think it's worth noting sometimes before we get into the minutia to understand on a larger basis where we truly are. So if we take a look at the stocks and what's going on here, this is setting up for a major move. Now, that said, when I drill into this, you can see your hiccups in here where 400 was an issue and how we're expanding. You drill into this on a daily, and now all of a sudden I might have an issue. Well, what's the issue? Well, these two tried to touch and cross, and now they might cross to the downside. Okay, that is an issue. It's also an issue here where, and I'm sure people are looking at this, you have that upper channel here as well. And of course, you always want to clone these. And by cloning them, you get the same trajectory of the line, and then you just kind of see where they fit in, and you kind of go from there. And you go, okay, well, there's the channel. So where could I come down to? About 500. Well, I really don't view that as the end of the world if we come down there. I actually view it as a buying opportunity. Now, on a weekly basis, I need to be aware that I am very exposed. Why when you're over here, it's great because that's giving you the opportunity for huge moves higher. And isn't that interesting that we're getting that going into earnings now? One of the things we have to really focus on with this is how are we, in looking at this, how are we going to position ourselves going into earnings? Right? And there's a couple things that I would point out that I think are extremely helpful and can help you make better decisions. Now, to start with, we can all see that this is a flag. We all get that. We could even argue that it's a pendant because of the shape of it, but we see it. So we're all aware that that is something that can obviously push higher. We're all aware of looking at this level over here and seeing that left shoulder, head, right shoulder, and we can see all that pretty clearly. Right? So, all right, so we get the long-term perspective. Does that mean that we need to get involved? You need to get involved if you're going to look at this on a weekly basis and you're a position trader. And you're saying, well, if I break 495, then I'm out. Because you broke out of the pendant here. And if you're willing to get out at that 495, then that's something. And let's just say that you don't want to trade options, and so you're going to do it through the SOXL. And everyone will remember this trade. We've gone over this trade ad nauseum from when we did it in the room and we were in at, I think it was like 14. Anyway, the purpose of me showing you this is going, okay, well, let's put that into application. Are you willing to buy that at 26, 25 and sell at 23? Some people might say, well, I don't really like an 11% stop, so I want to get in at a better price, or I'm a shorter term trader. Your best bet is to drill into these hourly charts. And you're going to want to watch this, I think, a couple times to just understand the concept that I'm about to go over here. And it's an important concept. If I take a look at the SOXL, or I take a look at the SOX, what I am always looking for is I am always looking for patterns. I am a pattern trader, period. It's that simple. I look at patterns, I watch how stocks act off patterns, and then I look for anomalies in those patterns. So here's one that will continue to work. See where this RSI is? See what happens when we break here? See where this RSI is? See what happens when we break here? See where this RSI is? See what happens when we break here? When you start to roll here and you break below that 70, you can see very obviously that the wind comes out. Now, that does not mean that you're going to collapse. It just means that you're going to underperform. So you have to ask yourself the question, do you want to be in that position of underperformance? That's something that only you can answer for yourself. You might be willing to ride that down and say, I am willing to deal with that until I break this level. I don't really care unless I break that level. You might say, I don't really care unless I make that lower low and it looks like I'm going to gap fill. Then I care. There are decisions that you as a trader have to make. I can only point out what has worked for me throughout the years, and then you can take it and run with it. But when I get over and then I get under the 70, I want to pay attention. You might want to remember that. It might be something that you want to utilize going forward. This is something that I've used, and I've used it for years, and I think it's extremely helpful. So what I would do with it is, once I understand this, is then I would just then extrapolate it out to stocks, or I would look at names like NVIDIA, and I'm trying to work on my pronunciation, guys, but it is what it is. And you can see here that it works fairly well until it doesn't, and then you'll start seeing breakouts, and I'm not going to get into the whole lesson of how to use this effectively, but when you're over here, and you start cracking, you want to pay attention. For us, even on Friday, one of the things that I said was we had a major trade in this over the week. We still have a position on in the room. But once I cracked up here and I flipped a certain level, it was the first time I reduced. And I think it was at like 76. And I was very uncomfortable actually reducing because I really like the company and I like the stock. But I did very well with it and I have to honor my process. Then you just start looking at these patterns. And once you have pattern recognition, you know you have a problem here. Like that's not rocket science, guys. When you have 2 wicks here and then you break those wicks, that's pretty clean. And then on top of that, I get below that 70. So there's a lot of things here to look at, and I don't want to get into all of it. But I think that we have to drill into earnings a little bit before we go forward and what's going on there, and start drilling into some of these other sectors that are just absolutely on fire. But if you look at the ES and you look at that 70, and when we broke, again, it's not rocket science. So it's just something that I would suggest that you take a look at and you monitor. Now, we are coming out with earnings this week, and it's 12% this week. That gives us some issues. So here you are, and this is going to be how you're reporting. I believe this is from B of A or Goldman. I don't have the legend down below for some reason. But the purpose of me showing you this is relatively simple. You need to know what's going on. So we just started that week here. Then this week coming up is 12%. Then the week after is 48%, then 15%. And then you can just see that, that's the peak area, these 3 weeks coming in, and then we're there. Well, why is that important? Well, that's important for a couple reasons. Number one, it's important because you're going to have people that cannot buy stock. Now, who are those people that can't buy stock while this is going on? Well, corporations can't buy stock. Remember this, $5 billion worth of corporate demand of buybacks happen every single day. Okay, that is $25 billion that is coming into the market every single week because of corporate demand to buy their own stock back. That essentially has stopped because now you're in that blackout period. That will pick up when we're through July 28th as they come out of that period. Therefore, some kind of pullback or more volatility into earnings is not something that would be unusual. Let's leave it at that, because you're starting to get into that peak blackout window area. So that's something we have to pay attention to. Now, there's a lot of names I want to get into, but before we get into the names, I think we have to look at what's going on with some of the sectors or asset classes. So we saw Bitcoin rally up on the XRP news, and that does make a little bit of sense for that to happen. But if we see this and we see this rejection, we have to understand why this rejection is happening. And I think that it's very clear. If you look at Wednesday's news, that the US actually moved Bitcoin that they got from Silk Road. They wanted to sell it. What they did was they just probably indiscriminately dumped that here. So they're not going to care. It's not theirs. So they didn't earn it. They seized it. So what they're going to do is they don't care. Get me out at any price. So they just dump. That's what I think this was. And I know that they move money to the wallets because they have to announce it. So that is something that we should be paying attention to, because this could absolutely just reverse and start going back up. So I need to pay attention to that, and we're going to get into some of those names. But pay attention to this. Do not rule this out. We also did not break. And I think that's a very important distinction before we start getting into some of the individual names. We also just need to take a look at sectors that are completely beaten down and that are starting to rally. So you have sectors like XLY, and we can see how that's doing. XLY, one of the charts we always look at is needs versus wants, which is XLY divided by XLP. And we can just see that our wants are starting to exceed our needs. And then we can just go back and look at the same pattern over again, right? Left shoulder, head, right shoulder, same thing over again. Wash, rinse, repeat. So now you're breaking out. So what is that telling you? Well, I keep hearing about this recession, and I'm going to show you a bunch of stocks that are breaking out that look like they're going to go higher in a little bit here. And I don't think that these stocks break out during a recession, and we're going to walk through why that is. But let's just look at some of these sectors. XLK, what happened? Well, we pulled back here. Well, what happened with Apple and Microsoft? Well, this is where it gets really interesting. On this graph that I have in front of us, just a very quick synopsis of what's going on here. So these are stocks that are underweighted by active funds. So large cap only, large cap long only funds, okay? These are the big guys, right? What's everybody overweighted or underweighted? There's a couple ways to read this chart. Number one is I'd want to know what is the number one stock everybody's overweighted in. That's of interest, okay? And then you'd want to understand which one is owned by a percentage of stocks the most. Microsoft. Well, that's interesting. So we're going to get to that in a moment. But if we take a look at Meta, then that's interesting that is the relative weight of active funds versus the S&P. So they are grossly overweight Meta. And then the question becomes, why? Well, they just started this threads and people kind of like what they're seeing there and they're starting to see the ad revenue come up. Okay, so we have an understanding of why, and that's something we may drill into a little bit here, but we have a lot to cover. I would argue that I'd be very interested in why are we so underweight here? Why are these large funds underweight Apple? I could understand why they're underweight Tesla. You get into the valuation, the PE. But if you're going to want to play in this arena and you're going to want to have exposure to these names, which everybody wants exposure to because they're the ones that are outperforming, you would start thinking that they're going to start paying attention to Apple and Tesla. Now, the reason that I bring this up is because Apple is a huge percentage of XLK, as everybody should be aware. It's 22%, something along those lines. And so is Microsoft. And we're going to talk about Microsoft and what's going on there in a moment. But what we really want to focus on is XLK's breaking out. Okay, anything else? Okay, well, here's XLI. Well, what's XLI? XLI is breaking out of all-time highs. Okay, so we have in the industrial space breaking out of all-time highs. So retail's breaking out, not as strong as this breaking out of all-time highs. You know, can someone say the word rotation? Maybe we're going to rotate into industrials. Maybe the semis are going to get a break. We have this base. How long did we base for? It looks to me like we based for about 2 years, and we should all be able to see this. And again, yep, this is a base to me. And so it's definitely something I want to pay attention to. Let's click on that. There we go. So you can see it right here. If I highlight that, it becomes very clear. And I want to pay attention to that. So this is the first couple weeks out of that base. Well, that's not extended at all. So now I have another driver in the market. People might not like that driver. They might find it boring to go out there and try and play the Boeings of the world and the John Deeres of the world and the Caterpillars of the world. They might not be into that. I don't really care. They're moving higher. It's very clear that money's going in there. Now, they could be going in there because the dollar's dropping. And then because the dollar's dropping, well, that makes it easier for people globally to buy our goods. Weaker dollar, and you can see the dollar's about ready to fall off a cliff, which is actually good for equities. Why? Because I just explained how that benefits the industrials. You might want to listen to that again. So that gives us drivers. So now we're getting drivers in the market, okay? And we have a bunch of names I'm going to go over, but I think we need to understand what's going on with all the players and where they currently are. Now would be a good time to look at smart money, dumb money, confidence. And as everybody's aware, when we look at this, the way that we try to focus on this is say, this is really institutions and this is really retail. If we look at it from that perspective, it gets a little bit easier for us to understand exactly what's going on here. Now we have an extreme reading here on dumb money. We can see that we're now over that January high here. We can see that we're really fastly approaching this high that happened. And I think there's a couple things to look at, and we should drill into this in pieces. I think we're going to get more data out of it that way, or more value out of it that way, I should say. You look at that spread right there, it's pretty wide. It's a pretty wide gap. We'll draw it this way so you can see it was just the line. That's pretty substantial. And so what we do is we just kind of look at those positions and see how we've acted in those areas before, and it gives us a little bit of color on what may happen again. And for me, it's the extreme readings that are the most interesting. The more extreme a reading is, the more interesting it is to me, because it means somebody's out of position one way or another. And that means that you're going to have volatility, and volatility as a trader is our friend. And just so you can understand exactly what I'm pointing at here, 10 years. And this is where we are. We haven't been here that many times. This has not happened that many times where we have retail coming in and being this aggressive at the same time where we have smart money or institutions being this out of position. And I think that's pretty substantive. And I think it's worth paying attention to, and then drilling into this and saying, okay, well, what has happened during this period of time? Now with smart money confidence, start with a 3-year chart. We can see this level is a level that we just very rarely see. We can see this level here that took place around January, and then we can kind of get a sense of how the market responded from there and what transpired. You can see that when they peaked on the market and then they sold, what kind of marks a bottom. In other words, when they're maximally invested here and then they start to slowly get out, missing the move instead of selling at the top, which is a little weird that they keep doing it, but nonetheless, it just shows you how out of position they've been, in my opinion. You don't really want to be buying all the way down, and then when you get up here, them reducing. It's kind of silly. But nonetheless, when we hit these extreme levels, which we hit here, they have consistently marked areas. Doesn't matter the time frame or what's going on. They have consistently marked areas where we have to pay attention. Extreme readings give you extreme readings. Okay. It's not really that complicated. I would try not to make it more complicated than that. Now, if you drill into this on a 5 and then you take a look at this, now we're on a 5-year, we really don't have much here. We have 1, 2, 3 times that we've been here. And that's pretty substantive. I think it is. And you can see, again, this is where they were maximally invested instead of scaling in, and then they got out as the market ripped. Go out 10 years, and you can see that this level is not something to play with. And you can see very clearly in here what we can do at this period of time. Let me just shrink this down a little bit and zoom into it. And let's just take this period. Now, if we look at that and go, okay, well, here's that period. What happened there? Well, what happened there? Well, we have this little move down, and then after that little move down, we just kept going. We have another one here. And then what happened? We just kept going. After we pulled back, we're not pulling back. And I think that's a really important distinction here. No matter when you look at these little levels, what transpired, it's very rare that you're not rallying. And why is that? If you really think about why that is, and we can even go back a little further. I don't want to go too crazy here. But if you go back a little bit further, and you just look at these spots, I mean, is this really something where you want to be getting out of the market? You could say here, well, that's the great financial crisis. If we have a great financial crisis, all bets are off. That's all I can tell you. I can't build a model around the great financial crisis. It's happened once in my lifetime. I've gone through 3 major bear markets, but the great financial crisis happened once. I don't see it again. Quite frankly, if it was going to happen, I think it already would have. But that's just an opinion. But when I'm down here, I want to be aggressive. When I'm up here, I probably don't want to be as aggressive, even though that this would have worked. Again, you're coming out of the great financial crisis. It's hard to build a model around that. And the reason that I say that is you just don't know what's going to happen. But if we look at the past 3 years, well, this gets very interesting. To me, it does anyway. It gets very interesting as how we're playing out here. And this is definitely something that I would be paying attention to when we're below this level. When you hit extreme levels of pessimism in smart money, you want to pay attention. Now, if we take a look at the past 3 years and we look at these levels here, when we're extreme, we could have a top on dumb money. When we're extreme on dumb money, we've had these tops over the past, I would say, 3 years. That's a concern. That's something that I'm watching, but at the same time, what I'm looking for is I'm looking for patterns. And so do I see a similar pattern? I kind of do, and I'm just going to point it out. So here you have a higher high. See this low, now you're high, that's a higher. Here you have a higher low, then you have a higher high. You start going through this and you start realizing that you have something very similar going on here. I don't think that this can get much more extreme than it is, but that doesn't mean that this does not start to consolidate, and then as it consolidates and drops, that the institutions do not step in. You could only be optimistic. Okay? You can only be pessimistic. And when you're at these levels of extreme, personally, I think you're setting up for a move. And that is very important. Now, that doesn't mean that it's going to happen in a day, but there's no way that institutions can stay that negative for that long. Now, if I take what I'm saying and I put this together, we're going to notice something over 10 years. There's an extreme reading, and you just kind of go through them. And then you realize that even those extreme readings, they're not really as extreme as where we are now. If I just take this line and just draw this line across, how many times have we really been here in 10 years? really has not been that often. You're looking at a spot here, and you're looking at a couple other spots here and here where you've been a little bit lower. There's not one case of being this low over the past 10 years that you were not higher 12 months later. And I think that's what you have to take away from this. You don't look at this and say, oh, this is by Tuesday, we're going to be up because smart money, dumb money. This takes time. It's like turning a huge ship. But as retail starts panicking a little bit and saying, see, I told you, institutions usually come in behind. I would say that if the spread on this was in the middle, I'd be a little more concerned. I'd be a little more concerned if everybody was in agreement, and they're not in agreement. We have a heated part of the market and we have a non-heated part of the market. And eventually that's going to revert back to some level of mean, and that means institutions are going to step in. I think it's worth following up on small speculation. Small speculators are people that are trading about under 20 billion. And the way to focus on this is just, this is an extreme reading where they are net short. We've been talking about these extreme readings for some time and how they had to fix it. They fixed it for about a day here. And then all of a sudden what happened? They just went net short again, and how'd that work out? Now, what we want to pay attention to is as we approach this level, that might mean that a lot of the short covering's done and that the market can start to stall. And of course, there are some signs of that short term. Now, in front of us is the fear and greed model. What they do is they use the same model that CNN uses, but they take into account the option market a little bit differently. And it's Sentiment Trader that's doing this. And I like the way that they do it better because it actually gives you a better sense of what's going on. And this is a short-term indicator. This is not something that you use long-term. This is just telling you where you're at on a more short-term basis. And that leaves you susceptible to a couple things. Number one, anytime you are over this red line on this particular model, anytime you are over this red line, you are open to more volatility in the market. It's just a fact. You can see here that when you're over, down and then up, and you can see the volatility that took place during this period of time. But look what happens as you drop. As this drops down, look how the volatility goes away. We also had $1.7 trillion that was injected in the market from back here, which makes life a little easy. And then you can actually see when they say, hey, by the way, we're going to stop injecting money, and you could see it where, and then it was like, oh boy, well, I better get out of the way. And then you can see the fear and greed and see how it just dropped here. And then everybody was excited and said, oh, well, now we're down here, so the market's going to push now. And that was the correction. Obviously, that was not the correction. Now what you have to look at is you have to say, okay, are we having extreme readings? You kind of had an extreme reading here, and you saw what happened there. Well, when we had this extreme low reading, did you want to buy? Probably not, but you didn't know that. Where I would focus more and where I like it is when you start seeing anomalies. And I'll show you what I mean by that. In other words, I look for divergences all the time, because divergences, it doesn't matter what the indicator is, it's a leading indicator. And it's a leading indicator for a couple different reasons. If all of a sudden I don't have the same level of fear here in the market that I had here, well, that's telling you something. Very clearly did tell you something. And you go back on Twitter when we looked at this, and I said in October, no one's going to ring a bell when we're near the bottom. And this is exactly what this did. It rang a bell. I showed it through RSI on the weekly. It is what it is. You have no idea if it's really going to be a bottom. No one has any clue. But what you do know is you had extreme reading here on CPI, and that was very important that happened there. And at the same time, you have these little spots, and you can just see how that played itself out. Now we have this curvature that we have to pay attention to. What does that mean? It means fear is coming out of the market. No matter how you want to look at this, fear is coming out of the market. Our baseline might not be, almost a zero reading where nobody wants to buy the market and everyone's living in fear. What we might get is some kind of pullback from this level. And what I would say is when everybody does feel this giddy and everybody is that excited, maybe we do want to pay attention to it. You look up here and say, okay, well, what usually happens when we get up here? Well, short term, we might have some kind of pullback. Well, how long do those pullbacks last? And that might be something to look into. Historically, when I look at them, it could be anywhere from a month or two. This was the last big move down, and you could see how strong that was. We're not getting anything like that anymore. Matter of fact, we're getting down, and then we're getting this. And I don't even know that we're going to get down to this 60 level. I don't know that that's going to happen. I personally think it's going to have to take earnings or something to do that. But that doesn't mean that you can't pull back. And I would argue that this is telling you on a short-term basis that that's probably out there. There's probably some kind of pullback. That said, you're going into earnings, and earnings can change a lot of things. One stock that stood out this week was Microsoft. The call volume was pretty interesting, to say the least. In other words, what you're seeing here is just call volume, and then you're seeing this from on a weekly basis. And so what we're looking at is this extreme line, and you can just see around here from the high to the low to what the average call volume is per week to what our call volume is per week, and then how they have the standard deviation of call volume and the movement from there. What is this telling us? Well, if we really dig into this, there's a couple key things that we could note. The most important thing for me is just noting this red line, which is really our demarcation line. And that's what we want to pay attention to. I think that's really important when you have a line like that and you can look at this and go, okay, well, this is over about 18 months. And how many times were we in a position where we were over that? And just kind of look at it and go, okay, 1, 2, 3, 4, 5, 6, 7. All right, here we are again. I think that's an issue, and I think it's something that we should be paying attention to. When I see an anomaly like this, it's something I want to pay attention to. If I'm only doing something out of 18 months and I'm only doing it 6 or 8 times, it's something that I want to take note of. And so when you start drilling into this, we can start seeing where exactly they're playing. This site is Max Pain. I use this site a lot. It gives me a really quick read on what's going on. Everything that I'm showing you here is free and something that you could use as well, but there it is. But there's the name of the site. I usually get asked about it. It's a free site. It's not a paid service. And then what you do is just come here and take a look and go, well, they're buying the 350s. Okay, that's interesting. We're going out to 21st and we're buying the 350s. We're buying the 355s. We're buying the 360s. We're not buying over here. And then look how close we're buying the puts. You're buying the puts over here, and you're not really going crazy with the puts. And look at the spread difference between these two. That's pretty big. Something's going on here, and somebody wants exposure to the stock through call options. Now, you drill into just Max Pain maturity, and you look at a position. Well, if you're to look for the pain level, and you try to figure this out, and you look at where those options are, you're way out here. Someone is predicting a pretty volatile move for Microsoft in a very short period of time, or else you'd be trading around this area or closer to this area. Not only are we off this level pretty substantially on Microsoft, the amount of calls that are being purchased versus the amount of puts is substantial. And then at the same time, the calls that were being bought are significantly higher than average. To the point we've only been here a few times in the past 18 months. When I see things like that, I want to pay attention to it. Now, the stock is coming out with earnings on Tuesday, the 25th. Here's what's interesting. As soon as we got up here, we had that volume kick in, almost like they're predicting a breakout. Now, we didn't obviously get one on Friday. What we got was we pulled back. We should be able to see that pullback. We got the previous level, and what did we do? Well, that's the kind of thing you want to pay attention to. But this gets more interesting when we go out on the weekly. We know earnings are the 25th, and here we are bumping our head against all-time highs. And as we're bumping our head against all-time highs, we're getting extreme levels of option buying, call buying in particular. When you look at this, you have to pay attention to it. And this is definitely on my radar. I'm not so much concerned about what happened in one day. In other words, the fact that we were at 351 and now we're at 345, it's a day. If I take a look at this over the course of time and I look at these gaps and what's been happening, well, we've really been consolidating for about a month, haven't we? If we look at it from that perspective and say, well, this has been the low of that base, and if we take this and just say that's been the high of the base, and then you just fill that whole area in and just say, okay, well, this has been the trading range. We really have not gone anywhere in the past month outside of this range, and that puts me in about a 20-point range. Well, now I have something that I can work with. And then in between that, I could just take a look at this, and I'd suggest you do this with hourly charts. Now I can kind of drill into this and go, okay, well, maybe this 343 is a level that we could stop at. That might be a level I want to watch on Monday or Tuesday, see how we react here. We gapped up and then just 5, 6 straight bars of selling, 5 bars hourly of selling, and the last bar hourly just turned to hammer. Maybe I want to watch and see how we flip that hammer and see if this comes back in. Or am I going to be somebody that is going to predict the top of the markets? I could tell you from past experience, I am not somebody that just says this is the top. That has never really worked for me until I get some kind of confirmation. And I'm not sure that I'm going to get confirmation before earnings. That's something else that I need to pay attention to. But this one really stood out, and it stood out specifically because of that option call buying. To be clear, we closed at all-time highs on Microsoft. And I think that's worth noting. We didn't see them buying protection. We saw them buying calls, and a lot of them. So now we understand where all the players are. We're understanding how they're positioned in Microsoft. We're putting all these pieces together. Now we have earnings that we're coming into, and we want to start looking for signs of how earnings are going. So we have AEHR, which is a semiconductor testing company. They had decent earnings. You can see this huge breakout. Now we're flipping this channel, and no matter what we say about last week or we say about Friday and the way that the market traded on Friday, what we have to look at is how did this act? Well, this flipped the upper channel on huge volume. Flipping upper channel means the stock has a reason to go parabolic. That very well could happen here. Now you drill into this on the hourly, and I have a huge flag. I have an hourly flag sitting up here. So this is not over. This just might be setting up. Maybe this was not the day to get involved because of how the index is set up and where we are position-wise on the index, but this is set up for a couple reasons. So this is a copy of the transcript of the AEHR call, and I'm getting that from Seeking Alpha. They actually have written word of the calls, which actually makes your life a little bit easier. Instead of listening to it, you can go scan for what you want to take out of it. So if you take a look at this, and I'm using just the free version here, so you can actually do this for free. But there's some things I just want to go through so we understand this. Okay, you have record bookings. Okay, that's really important. Okay, so you have total revenue grew 28%. Okay, so total revenue grew 28% to a record 65 million. Bookings grew to what? 73.8. GAAP profit grew. Were also records. Okay, so your profit's up, your non-GAAP profit's up, and you're growing 54% to 62% year over year. Okay, why did you do so well? The record performance was significantly driven by bookings and revenue shipments of our wafer level test and burn-in systems. Okay, this is really important. Well, what area was that? Well, that was in semiconductors used in electrical vehicles, electric charging infrastructure. Okay, that's really important. So is the rest of this for obvious reasons and what they may or may not be doing with NVIDIA. The purpose I'm getting at here is that is not a company that is telling you that they're about ready to have a problem. So if we look at that and say, okay, well, that's a company that's not ready to have a problem and they're in the semiconductor space, I don't know that we should be out here thinking that semiconductors are going to have a bad time during earnings. This is the first shot across the bow. This is exactly what's happened with that shot. This could be one of the reasons why we're seeing some positioning like we just saw earlier in Microsoft. So this is definitely something that we need to pay attention to. I would not rule this out, and we're going to talk about some other sectors as well. But I do think that we just need to talk about, what's going on in the market. Now, for us, let's clean this all off and start over. This is something that we've been talking about for 2 weeks in this, and it's also something that we were in the community and did exceptionally well with. And the purpose of me bringing that up is this was the base. I broke out. It is very realistic to assume that you're going to have some kind of pullback or some kind of test. And for me, that starts happening when I get to a level such as here where I have an 87 or an 88 on the RSI. It doesn't mean I get out, but I definitely trim when I start to see that and I start to see the roll. And I gave you something that I personally look at, which is, well, we're breaking that 70, I might reduce up here. Okay, just as when I broke out up here, I was still on that base. So I didn't really have as many concerns. Well, now out of this multi-month base, I'm overextended. So Could I pull back? Could I rally and then pull back more? Sure, you absolutely could. So this was a pretty clear sign for me to start to trim, but I don't know that this is over. And these are names that I'd be paying attention to. I'd be very interested to hear what he's got to say about their Bitcoin holdings on August 2nd. And if he's going to talk about what his plans are for them, because I do believe that there is some kind of plan there, especially with what just came out of these court hearings. So we look at this, and then this gives us an understanding of what's going on. And I do think that we eventually could head up to this level, but you might come down and retest before that. And that's what we have to start realizing, okay? When we start getting this far off the 55, and we haven't been this far off the 55 for some time, you want to start paying attention to that. You're 50% off of it. Maybe it needs a break. Maybe we're going to come back down and test the 12, and that would only get you to 380. So it's not like you're going to fall off a cliff. So that's definitely something that's very important. NVIDIA, I know a lot of people are looking at this and saying, well, that's a reversal. Well, maybe it is. Maybe that is a reversal. I mean, that one was marked here. We were marked here. You have an upper channel right here, and you didn't break it. I mean, that's not rocket science, right? So we can all see that. Does that mean that I don't want to own that? No, it does mean that if I was going to trim, and this is the part that I think people are missing. People are always saying, oh, well, this market can't last. It's a bear market. It's this, it's that. I'm going to go through a whole sector of stocks that are showing you the complete opposite in a minute here. But what I'm getting at is, all I have to do is look at this, look at how I'm breaking, and I had a signal up here where I got out a little earlier. Look at how my RSI is rolling and going, what am I doing? I need to just reduce my exposure. So when you start understanding this and you have a methodology and process, your life gets a little easier. And looking at that, it's not something I would buy. I wouldn't buy that here. Okay, that doesn't mean that I don't want to own more of it before earnings. It doesn't change what I said earlier in the week that Goldman was saying about how they probably have to raise their earnings. None of that's changed, but that doesn't mean that I can't get to 426. That does not mean I'm getting to 323 or 303 or 323. Okay, so you have to understand, I'm going to say it a lot this year, you don't have $1.7 trillion behind you anymore. So you're going to have massive volatility in the market. And by massive, I mean normal, that you haven't experienced unless you were trading for over 12 years. Because once zero interest rates kicked in, nobody really had to pay for anything. Now you have to pay for things. So, and what do I mean by that? Well, if your margin rates are 1%, you really don't care. There's no reason to sell. But if your margin rates are 6 or 7% and you're owning stocks and that stock's dropping, well, now you have a problem. So it starts affecting everything, and it did affect everything for a very long period of time. So we start looking at this, and so no, I would not be chasing that. If I start looking at Tesla in here, I would argue that Tesla, which we know is undervalued by funds that need to greatly chase performance. Well, we have earnings Wednesday. Now look at what's going on here. You're turning, you're holding in here. Well, I didn't break down in reverse like we did on some of these semis and other names that we're about to go over. I didn't do that. I stayed near the highs of this area. Well, that's interesting. And we hit a higher high. Well, that's interesting too. So I would note that. Now, what I did note was this, and this could just be market makers, but I think it's worth paying attention to. We had a little trade on Friday on this that made a lot of sense. And then I thought we could get up to that 285 level. And that's pretty much what we did. We just got back up to this little area up here. Let me just drop it up there. So I thought we'd get up here to that 285. I don't know where they were going to pin it. They definitely didn't pin it around that 280. They sure tried though, and they were just unable to. So I always find that somewhat interesting. Let's disregard those moving averages for now. But I would not sleep on this next week at all. I would not sleep on this. I'd be paying very close attention to what's going on here, how we're unable to make those lower lows here, even though we're riding that 70. And again, I do look at that. So this would be on my radar. I'm going to leave it at that. Now, coin, I'm not surprised by the action. You had that follow through. Everybody was very excited about this. The stock, since the SEC came out and is investigating them, people obviously did not believe it and were doing some legal work apparently on the matter. This blow with XRP is a real problem for the SEC. It's a real problem. Because essentially it's saying that XRP is not a security. And coin the next day, what did they do? Or the next hour, what did they do? They just relisted XRP so that anybody can trade it. That tells you what they think of their problems with the SEC. In my opinion, I think that's very glaring. I also found it interesting that BlackRock, Fidelity, I think Kathy Wood's even talking about it, they're all going to put their Bitcoin ETFs there. And we can talk about that a little bit greater, as well as why do they think that they're even going to get a Bitcoin ETF. I'd probably do that in another video, but you get where I'm going with this. I'll let them build that doji out and let that doji set up and then go from there. Dojis are great because they're signs of uncertainty. And then when they finally walk themselves out, you have wicks on both sides, and wicks, as we know, are price rejection. Then we can kind of go from there and figure out what we're supposed to do. AMD, this was nasty. We had a really good trade on this during the day. So our key level was going to be here. This is what we wanted to flip because we had so many issues with it. We were unable to get through it here. It became support. Then it becomes what? Resistance, resistance. And we can all see that. And then we could just see this move. Now, the nice thing about this move was it was super clean. The moment we touched, broke down, and then just lifted, and you can just see that very clearly. And that was our target right there. And it made life very easy because you hit the target, which was surprising that we hit it that day that fast, but nonetheless we hit it within 45 minutes. But what was nice about that was it also gave us the opportunity to do it again. Drop that right there. And you can see when you touch there again, well, then you just knew that, if you weren't out the first time, the second time sure as heck told you to get out. And then, of course, when you break that neckline right here, you can see that you should have gotten out there as well. That gave us multiple times to get out of this name. And so this was a trade we did quite well with. But that said, you're going to have winners and losers in this game. And that's an important distinction. That it does not inspire confidence at all in AMD to me, because that is just sheer selling. Okay, nobody wanted to buy, no one, when it got up here. So there was a trade, people were excited about the trade, and then they realized that maybe they're in the wrong names and maybe they don't want to be in semiconductors. That is a really nasty reversal. I would not sleep on that. I would not chase it. I would let them work that wick off. Maybe it takes a day, maybe it doesn't happen. But what I did do was I closed below resistance. You always want to watch where you close. That's not ideal. Apple to me is something that we should be paying attention to because people are underweighted. I'm paying very close attention to this. We had a nice trade in here. We made about $10 and then got stopped out. Now we're getting this doji on the weekly. I would be watching this very carefully. And I think earnings this week are going to give you an indication of what to do. I'd watch that 192 level. Netflix, we have earnings, and you have a lot going on here, guys. You have a lot going on with this AI, and they want to use their faces in actors in perpetuity. It's kind of crazy what they're trying to do, and I think that you could see this strike go on for some time. I don't know how they're going to talk about the strike and what they're going to do with it, but if you see us flip here and move through that level, that'd be great. But you have to watch that. You have to watch that level really carefully. That 457 would be it. This is one that if you've been following, I've been talking about the home builders for some time. People have really misunderstood what's going on here. It's very clear how to play the home builders, guys. You just look at supply and demand. Okay? You're short 6 million homes. And then on top of being short, people have 3% interest rates on their mortgages. They're never moving. Okay? They're just not. They might move and rent that house out, but let me rephrase that. They're not selling. And if they're not selling, those houses are not coming on the market. So I expect this to push higher. The name that we've been playing in and doing quite well with is TMHC, but I expect that whole sector to push. Now, I want to just preface this. We talked about sectors and how certain sectors are breaking out. And then you start drilling into those sectors and going, okay, well, what's really breaking out there? Well, there's several names in the sector that are really breaking out, and they're not the names that people are really talking about. And that's something that we're going to change today. I'm going to go to a weekly chart, and I just really want to make this very clear. Look at this XLY. Look how you're here. Look how you're trying to break out here. These are names to me that people just aren't getting. They're not paying attention to, okay? Here's Louis Vuitton. It's extremely thinly traded. You can see that. This is something that trades on the OTC here. This is all-time highs on Louis Vuitton. That does not happen during a recession. It just doesn't. Here's Hermes. Okay, we're hitting all-time highs. Okay, again, does not happen during a recession. If you've been following me for some time, I've been talking about this trade since about 280. And we got in this trade around 280. You have a 2-year backlog on Ferraris. They have to come out with new models and higher end models to meet demand. And that's exactly what they're doing, okay? You're at all-time highs. None of this is leading to a recession. None of this is showing a recession. Restoration hardware is breaking out. RSI is curling up. You all can see that level there. You can see that 3-bar pattern and how we just pushed through it like it was butter. Again, this one's setting up. You should be able to see this multi-year base and how we're breaking out. And where would we get to? Maybe this neckline, maybe we just get up to here, but that's still another 30% just to get up to there. That's not something that I would be sleeping on. I'd be very focused on these names and very focused on high-end retailers. They are on fire. This is all-time highs. Went public in 22, December 21, and now look at how we're breaking out. I would focus on these kinds of names. These are not the kinds of names that rally if you're going into a global recession. That's it.